if you're about to take out a business loan, before you hit go, just check these 6 things, because I'm going to share with you 6 different things that you can do that will potentially either save you time or money or both. Some of them are things you've probably not considered, and one of them is extremely obvious, but you'd be amazed the amount of people that don't actually check this. So I'm on the road today going to see a new client. Somebody was recommended to see me because he's got quite an interesting business actually. It's kind of part logistics, part manufacturing. Been going about 17 years, looking to raise some cash. They're essentially trying to diversify what they're doing, and they need some funds to do it. So I'm popping out to meet him, have a little look at his stock, because he's actually got quite a lot of different assets within the business and that we're going to review, and he doesn't really know what they're worth, and originally was looking at potentially taking out a standard loan. And that's when he came to me. And what we're going to do is, he said to me over the phone, he's got a couple of trailers, there's vehicles, I'm not even sure what the vehicles are, and then on top of that there's some equipment, and I think there might even be some machinery. So I said, look, let's have a little look, let's see what you've got, let's look through your asset register, and we can have get a better idea of what your options are. So that's where I'm going today. But that kind of leads me on, it gives me the opportunity to share this video with you, which I've been wanting to do for a little while, which is give you these ways in which you can effectively save a lot of money instead of just having a standard business loan, or if you are having a business loan, different ways in which you can save money. So the first one is to make sure that the business loan is the right product. If you're looking to get a business loan but you actually need to buy assets, asset finance 9 times out of 10 will actually be a lower cost option for you. The same as if you need to purchase stock. A flexible credit facility might actually be a lower cost option than going for a standard short-term or long-term repayment loan. Same if you've got a temporary debtor gap, then maybe invoice finance would be appropriate. There's all these different things that you consider when you're looking at different funding solutions. And yes, if you're looking at expansion, you're looking at just pure working capital, a standard working capital loan might be the best option, but it's definitely worth just considering your options before you hit go on any loan application. So the second thing that you can do to save money on your business loan is, well, it sounds ridiculously obvious, but have you actually asked for a better deal? Now, the reason I say that is a lot of limited company commercial finance, it sits outside of the consumer credit regulatory framework. So depending on the lender, they will be able to flex on their offering. So it might be if you're going directly to a lender or even via a broker, they might be able to reduce the initial fee that you're getting charged. So sometimes in business loans, they have quite high upfront fees. That quite often can be negotiated. But on top of that, the broker may also be able to influence the rate. So unlike with regulated consumer car finance, where you don't get the opportunity to do that, in the non-regulated space, there are actually a lot more options to you. So it sounds simple, but yeah, ask for a better deal. And what's the worst that can happen? So the third thing that you can do to save money on your business loan is actually potentially wait to pull the trigger on it. If you are about to file new accounts, especially if you're a new company, if you've only got 1 year's filed accounts or into your 2nd or 3rd year, and those next set of accounts are going to substantially improve your credit score, it's definitely worth just holding fire until those have been filed, and that will potentially help you get a better deal. On top of that, just generally improving your credit score I'll give you these for free. That will help. Making sure your personal credit file is intact, making sure that you haven't entered a time to pay with HMRC, keeping up to date with all your payments, having company's house all up to date. All those sort of things will definitely impact what you can get and the type of deal that you're going to get negotiated with a lender. And that's both on a business loan and in asset finance, to Okay, so here's a really good alternative to taking out a business loan. Have you considered looking for any local or regional government grants? Now, I'm talking about anything where there's sort of money available in your area or in your particular specialism that you are trading in. Sometimes there's government-backed money and regional pots, and they do exist. You need to search for them. If you go to gov.uk and search finance support for my business, that will bring up a ton of options for you, and you can explore those. There's an official like search directory for business and finance support on there, and I think if you go on, there's like a find a grant service, so you can kind of look up those sort of things. And then have a look at the British Business Bank regional investment funds. They can be a slightly longer process. In my experience, they generally are quite a lower cost and specialist, but there are definitely options there, and it's always worth asking, exploring, speaking to your finance broker, and seeing if that's an option for you. But as I say, maybe just have a look online, go on the Gov website, and see what's there. So this is one of my favorite alternatives to taking out a business loan. And it's just checking what you've got before you go and borrow more money. So if you've got machinery, assets that aren't being used and they're unencumbered, so that means that they're fully paid for or partially paid for. So it might be that they've had some finance on in the past and there's a very insignificant amount of finance left on them. All of these assets can be added up and bundled together, and finance can be raised against them. We call it either a refinance or an equity release. A lot of people kind of miss seeing the value that they already have lying under their nose. And again, this can offer you a much improved terms on the finance. So it might mean that you can get a longer term, which means better monthly payments. And it also most often will result in a lower interest rate as well. So explore what you've already got, what money effectively is sitting there not being used in your current assets that you've got. And finally, and this is going to sound ridiculous coming from a finance broker, but I'm going to say it anyway. Sometimes the cheapest business loan is the one you didn't take. There's a big difference between taking a 1 to 2% per month long-term funding solution to support your growth plans, have a structured forecast, repayment model, and the big thing, a return on your investment. The alternative, taking 4 or 5% per month loans on short term to have as a quick fix, 9 times out of the 10 normally results in you being in a worse position. There's a lot of short-term loans going on out there at the moment. There's a lot of cowboy brokers and banks directly offering you kind of last-minute funding solutions to help you. You obviously attach most of the time a personal guarantee to that as well. And unless it's really well structured, there's a clear plan on how those funds are going to be utilized and get you to the next step. Just be really careful with those loans. If you can hold off, get through that pain period, improve your credit score, and clean up the finances of the business to get to a point where you can then borrow money down the line on better terms, better rates, you'll be in a much better position. I know it's not always that simple. Sometimes you need that quick fix. So I'm not saying that you shouldn't ever take those types of funding solutions. I've arranged them myself, but it is always as a last resort, and you've got to take some advice and plan it carefully. But really, there's no point taking on bad debt. Potentially, you're just avoiding the inevitable. So, or putting your business just in a worse position. On that note, what I'm going to do on a future video, I'm going to share with you the best ways in which you can improve the cash in your business without taking on more debt. Stay tuned, and thanks for watching.